serves a nationwide network of financial professionals. Call 1-800-290-7226 or email thequest@brokersalliance.com. And remember, when you need financial guidance, call Brokers Alliance.
Well, welcome back to the Quest for Financial Freedom. I'm your host, Steve Savant. And of course, with me today is my very special guest on the Quest, Eric Palmer. And Eric, we're going to be able to talk about so many things in this next half. You can write either one of us, the Quest at brokersalliance.com, or give us a ring, toll free, 1-800-290-7226. That's 1-800-290-7226. And we're talking all today about our Valentine's special. Nothing says love like life insurance. Now, that is economic bizarre talk, I know. Eric, welcome back to the show.
Glad to be here.
Well, here we go again, Eric, another week of talking about things. And boy, what'd you think about Carla's interview?
It's fantastic. It's eye-opening. You don't realize things like the diet or maybe the herbal types of treatments that you're taking could affect you so dramatically.
I guess I'm not doing the Atkins thing before I take my exam. I thought getting down on my weight would be good.
No more protein diets, right?
I guess I got to stage it in a little bit better.
Right.
You know, when we're talking about life insurance, we're really talking about leverage. I mean, today people are living longer. The cost of insurance is going down lower. And really, after speaking with Carla, we really want to listen to her advice on taking exams because this really matters. I mean, Eric, and I'm not talking about sick people here. I'm talking about people, normal people. They're going to take that blood and urine exam. They're going to take that height and weight, and they're going to parse 5 different health categories based on that information. I mean, it used to be, when I first came in this business, either you were a smoker or you were a non-smoker.
Right.
Now, a non-smoker is going to be looked at as super preferred, preferred plus, preferred, standard plus, and standard. And we haven't even got into sick people yet.
Or tobacco. That's just non-tobacco rate classes.
That's just non-tobacco.
Exactly. So there's at least a half a dozen for each type of category on average that you could fall into as far as rate class goes, and they could vary by 25% per premium. So it's actually quite a jump once you get into the substandard categories, which are endless.
Well, I definitely want to take Carla's advice. And again, you know, if you're a producer and you're listening, or you're looking for a pyramid service, you know, check out EMSI, and they're one of our people, and she does a great job for us here in our state, and maybe EMSI can do something for you as well.
Well, they're top notch, and I think the education that they provide for advisors out there to teach them things like what we've learned today is extremely important to make sure our clients get the absolute lowest cost premiums.
I can't wait to see our Twitter account on this and our insurance forum account on this, because I think it's going to be huge. When you think about a lot of our producers, as you said, Eric, I mean, they're kind of like vacant on this. They're kind of ignorant in these areas. And here's a way to position your client to take the best possible exam, to get the best possible results, to pay the least amount. Because I don't know about you, but I want to pay if I'm buying life insurance strictly for coverage, I want the lowest premium I can get.
Of course, absolutely. And it's no different than any other form of insurance that you're purchasing where you can qualify for lower premium. You want to try to get the best rate you can.
I'm thinking about when we look at the difference between super preferred, which is the top health category in the United States and the Western world. Almost everybody, foreign reinsurance treaties as well as domestic reinsurance treaties, they are now parsing. They're really managing to the nth degree, it seems, your blood and urine results. I mean, your cholesterol and height and weight, family history. They're really measuring this to I would call it the most intense, since I've been in this thing almost 30 years. It is really getting intense.
It is. You know, there's a lot of advancements in medicine, the types of medications that are available that will control things like blood pressure and cholesterol. So they've created some of these subclasses to really address the difference between someone that's been diagnosed with blood pressure and someone that's been diagnosed with blood pressure, and they're taking a medication to keep those levels controlled. So you can actually see the difference in one whole rate class just by the fact that you've taken a medication for that particular instance and have it under control.
You just brought up a huge point. Taking medication for like a cardiovascular issue is no longer a declinable or a postpone. In fact, many of our people, depending upon what your age, gender, and probably height, weight issues to go along with the cardiovascular, when you look at that, I'm looking at numbers that can position your client to even get a preferred rating, even though I'm on high blood pressure, for hypertension or high blood pressure medication for hypertension or cardiovascular, post-cardiovascular events. I'm kind of surprised by that.
And it's actually only been really in the last 10 years that we've seen those types of significant changes in underwriting. We kind of always joke, they used to just base it on the 1950s, right? Mm-hmm. Everybody that was diagnosed with some sort of cardiovascular disease mm-hmm. had a very shortened life expectancy in the eyes of the insurance companies at that point. Mm-hmm. And things have obviously changed dramatically, especially with the type of medications that are out there to control these conditions. And when I first got in the business, not quite 30 years ago, but mm-hmm. just even 10 years ago, we would sell term insurance, and blood pressure could be a major event changer for you, and now mm-hmm. Not so much.
And I just saw last week, which could result, we don't know for sure, but could result in huge changes in the way we address cancer from an insurance point of view, because now they're looking at, as an example, breast cancer. They don't have to take the lymph nodes out, all of the lymph nodes out, just the ones that are by the damaged tissue, the infected tissue. That could be a game changer.
Absolutely. Where cancer in some cases completely took you out of insurability mm-hmm. altogether, now within a 5-6 year time horizon, depending on how long the cancer's been treated, how long ago it was treated, mm-hmm. how long you underwent the treatment, we could certainly find insurance for those folks today. Well,
I'm amazed because I noticed that certain carriers are more benevolent than other carriers per disease. So it's when I see a client and I look at their medical information and I see maybe the outstanding issue in their life, I already know going in that there are certain carriers that look at this in a much favorable way than other carriers. I mean, that surprises me. I thought there'd be a lot of more uniformity, but there really isn't.
I think what it comes down to is there's so many variations in health conditions out there that no company can specialize in all of them. I think what really comes down to is insurance companies evaluate the market that they're trying to be in, the individuals that they're getting in terms of applications, what the demographic is, and they're choosing to specialize in certain areas, and it has to do with a lot of the advancements that you see. So cancer treatment, there's been amazing advancements there, and some of the bigger companies have really spent a lot of money to try to understand the effects of life expectancy or on life expectancy with the different treatments that you can get today.
Well, there's a variety of carriers that are out there, and I mean, there's, I'm looking at a list. Seriously, this list is about 700 U.S. and Canadian carriers, and there's been a lot of contraction in our industry. We were over 1,000-something carriers just 10, 12 years ago, and It's really contracted, a lot of buyouts and so forth. But I'm looking at, think about this, I'm looking at the #1 carrier in the world at $3.6 trillion insurance in force. The top 5 carriers combined are over $14.3 trillion. Listen, if everybody in those top 5 assigned their death benefit to the United States government, we'd have our deficit would be gone. We'd be debt free. Yeah. And think about this, all these carriers, in fact, you heard it here first, I am now pushing politically a national life insurance. Everybody gets covered so that when we die, we can pay off this debt, because the leverage of life insurance is so huge. We're going to be talking about this tomorrow, but I looked at some of these numbers. You're getting sometimes 4-to-1, 5-to-1 bang for the buck, this leverage discount and tax advantages.
Absolutely. For every dollar of premium you're putting in, you're getting 5, 6, 7, if not even $10 in guaranteed or some form of guarantee on your death benefit. So the amount that's actually going to your beneficiary after you pass away, and that amount transferred, the death benefit, as we call it, that gets to the beneficiary is completely tax-free.
When I'm looking at certain companies to cover this, because we're going to get into all the forms of insurance all this week, we're looking at 6 rating services that kind of show us they're kind of a heartbeat, so to speak, no pun intended, on their financials and their claims paying ability. We also look at a 4-page balance sheet, which is a summary of what they call the convention blank, which is basically the financial filings in a state. When I look at that, I'm trying to figure out, because remember, a contract is only as good as the company behind it.
Right.
So, we want to be able to do a little bit of due diligence. I want to kind of look and make sure I get a decent carrier. And there are several carriers that are highly rated, and a lot of them we have in our complete inventory. And if you want to see, is your client, maybe you're saying, I wonder how my carrier is, you could call us at 1-800-290-7226 or write us, The Quest, at brokersalliance.com, and Eric will send you all this due diligence. We carry about, like I said here, I'm looking at 700 plus carriers. We look at them all.
Right.
And if you're kind of questioning, I have life insurance, and maybe you haven't had a review done in a long time, this would be the time.
That's actually a really good point, too. We have a presentation that we've put together for trustees and for advisors out there. It's a life insurance review. It's like an audit. Everybody should take a look at the policies, even if they already have life insurance and it's in force. It doesn't mean you have to buy more. It means you have to take a look at what you have and make sure it's still addressing the needs, your mortgage, your cost of, of living. We can all safely say that inflation is going to happen more and more as we continue to print off money. We can all safely say that the cost of living is going to increase as it has over the course of the last 50 to 100 years. So it's always good to take a look at those existing policies and make sure they're still covering all the needs that you have at the point that you pass away.
And again, for free, just send it in to thequest@brokersalliance.com. Eric and his team of professionals will go through, completely rake through the entire policy provisions, look at the numbers, and 60, not all, but about 65% of everything we look at, we can either reduce the premium the client's paying or increase the benefits.
Absolutely, and keep in mind, like you said earlier, there's different companies that focus on different health conditions, or they do a little bit better in terms of underwriting and creating lower premium for certain health conditions. So even if you've recently had something, maybe you had some stents put in 6 months ago, it's worth taking a look at. There's opportunities for us to make sure that you are 100% covered for the amount of insurance that you need.
So you're saying, I mean, by stents, you mean you had a cardio event.
Cardio event.
And they put stents in there to clear out those arteries.
Today it's an outpatient procedure. So you go in, you could have a couple of stents, you'd be out and having dinner that afternoon with your family.
And that's not going to kill you.
It's prolonging your life, in fact. So that we take a look at that and say, you know what, this is having a positive effect on life expectancy, and so maybe it isn't as bad as it would be if we were underwriting it 25 years ago.
See, that to me is really amazing, because you're looking at things that only a decade ago would have been either declination or a postpone, or they would have really put a heavy price tag on it,
right,
would have rated you. But now we're talking about a lot more understanding. We're living longer with whatever events we did have,
right,
and we're pushing the boundary of life expectancy to a whole new place. I never thought we'd ever go this far out and look at this maturity dates at 120 years.
It's amazing.
Unbelievable. Well, listen, I want to thank you, Eric, for being on our show, our sponsor, Brokers Alliance, and America, where anyone can go on a quest for financial freedom.